there's like a thing you scratch off or something, you have to enter your permanent access code in order to keep using MBC. So I think I sent out some instructions on that near the beginning of the semester. But if you're struggling with that, has anybody actually who bought the ebook? Has anybody here bought the ebook? Did you go back in and add your access code once you got it? Okay, if you haven't done that yet, it's coming up, right? So you only had like, I kind of thought it was supposed to expire the 1st of February. So if you haven't looked in recently, you might have an issue going on there. So you need to make sure you check on it. The tech support people can help you. If you go into MBC, you can click on tech support and they can help you figure that out. All right, so let's see. All right, before we get started, let me just talk about a couple of things while I have your attention. So I'm putting up the last slide first. Obviously, the exam is Monday evening. And so just a couple of things I'd like you to be aware of. The exam itself is from 7 to 9, but we have to check you in. So as I mentioned last time, we need you to arrive sometime between 6:30 and 6:40 so we can check you in. You'll need your UGA student ID. And we will check you in. And like on a normal class day, when you come in, you'll pick up a handout which tells you where you're sitting. So you know how you normally sit in a group? You're going to be sitting in a group. For example, some of you are left-handed. So you're going to want to be on the left aisle probably. And if most of the other seats are right-handed, so it's probably not an issue. But be considerate if you have a member of your group or who's sitting with you who needs to be on the left side, try to give them that option. And let's see. So when you get here, you're going to sit down. You'll also have your Scantron, so you need to fill that out. We'll talk about that in just a second. Let's see. Again, seating is assigned. Closed book, closed notes. You can bring a calculator that's non-programmable. I want to just point out something else. There are 2 versions of the exam. Don't be tempted to look at the person next to you because they're going to have a different version of the exam. So we're going to be focused. We're going to be ethical here. I just want you to be aware of that there are 2 different versions. All right, so let me go back to the beginning now. All right, so the plan for today is to go through the exam, the practice exam, and just review it and answer questions. So I will kind of give you an overview of what we've covered so far, some of the key points I want you to remember. We'll go through the practice exam and then just kind of open it up for Q&A at the end. So that's the general plan. Okay, I want to point out, if you've not yet worked through the practice exam, please do it. The practice exam gives you a very good indication of what you'll see on the real exam next Monday night. So a couple of things. This cover sheet is exactly the cover sheet you'll have on your actual exam. So read through it carefully so you know what's expected of you. I just want to point out a couple of things. So first of all, when you sit down, obviously you'll have a handout that tells you where to sit. You're going to have your Scantron. Spend that time filling out your Scantron. So I need your full name bubbled in. I need your student ID number. And on the front of your exam, there'll be a number in the lower right-hand corner. Say you're number 156, and I want you to put that under where it says special codes. I'll remind you of that again on Monday. Just be aware that the multiple choice scores are going to be graded based on your Scantron. So you need to make sure you bubble in carefully. There's no partial credit on multiple choice, right? So don't be sloppy. Make sure you put the correct answers in the correct spots for each question. And the other thing I want to mention is just budget your time wisely. I'll get back to your question in a second. So it's a 2-hour exam, and you need to kind of think about where are your strengths and where are your weaknesses, right? So the multiple choice, obviously, you want to make sure you get those right. If you were kind of stuck on a multiple choice question, you can narrow it down to 2 choices. You could guess, right? You can't guess on a statement of cash flows. You got to fill out the full statement of cash flows, right? So if you cut yourself short and you spend your time spinning your wheels on multiple choice questions and you get to the end and you can't finish the statement of cash flows, that's a lot of points. So I'll point out to you again, the multiple choice questions are 15 questions, 4 points each. So that adds up to 60 points or 60% of the exam. Your statement of cash flows is 40 points or 40% of your exam score. So you don't want to leave yourself in a crunch for time when you get to that. So you'll have to decide, do you want to do the statement of cash flows first, or do you want to make a quick pass through the multiple choice questions, circling the ones that maybe you don't know and you come back to those later. But just make sure you budget your time wisely. Okay? Most people are able to finish the exam in time, but again, you don't want to cut yourself short. While I'm thinking about this, if you have special accommodations from the DRC, and if I have emailed those students, so if you have not received an email from me and you're supposed to be having special DRC accommodations, please talk to me after class today. All right, the other thing I want to point out is I'm going to ask for your signature on the exam. This is basically the honor code, and it's stating that you're being honest in the way you answer the questions, you're not looking at someone else's answers, etc. All right, so that's kind of the setup for the exam. What I'd like to do now is spend a few minutes just reviewing the big points. Oh, go back to your question.
Will we need to buy our own Scantron?
No, the Scantrons will be provided. So when you come in, you'll pick up two things. You'll get the assignment sheet, which tells you where to sit. And by the way, that assignment sheet, unlike the handout most days, has problems on the back. It'll be blank on the back, so you can use that for scratch paper. And we will give you a Scantron as well. So any other questions while I'm thinking about it? Jack?
There were 2 extra practice problems for the statement of cash flows that you uploaded.
So statement of cash flows. Tuesday's class, we went through a full-blown statement of cash flows, so that's a good one to practice. Today, we'll go through the cash flow problem on the practice exam. I will email you after class today. I didn't want you to look at it too soon, but I'm going to give you another practice problem that we've developed. And then also the first day we covered cash flows, we did standalone operating section, investing section, and financing section. It's not really a full problem, but again, those are good examples that you can work. So you should have kind of 4 good examples. Plus, you had homework that was due on Tuesday. There were 2 cash flow problems. I would encourage you to work those again. Use the approach I'm showing you. The book doesn't always show it exactly the same way, but so that kind of gives you 6 practice problems for statement of cash flows.
Would the question on the exam be closer to the homework, or will it be in class?
The exams are very much like what I do in class. So I'm trying to gear everything, all the problems we do in class, those practice exercises, I'm gearing you toward what's going to be on the exam. All right? As you have other questions today, please feel free to raise your hand at any time. All right, so we've had something like 8 class days up to now, and I've got like 8 slides to summarize what are the most important points that we've learned so far. So the very first day of class, or it was the second day actually, I tried to help you understand the 4 financial statements and how they all fit together, how they articulate. And so just remember, we start off at the beginning of the period with a balance sheet. It's a snapshot of how we balance out as of January 1. During the period, we're going to keep track of our performance using the income statement, right? What are all the revenues we've earned during the year? What are the expenses we've incurred during the year? And that will result in net income for the period, right? So at the end of the year, we take another snapshot. So how do we balance out at 12/31? And what's going to show up in that equity section is going to include the income we've earned during the year, right? So statement of retained earnings is how income flows into the balance sheet. So we have beginning balance and retained earnings, which was the number over here, plus net income for the year, minus any dividends we paid, gives us the ending balance and retained earnings that shows up at the end of the year. All right, statement of cash flows is where we've spent the last week and a half, and we're going to hit it really hard again today. The purpose of the statement of cash flows is to simply explain the change in cash. So beginning balance sheet, what was cash on January 1? And we know the ending balance sheet cash number. So here's cash at the end of the year. We're trying to explain how cash changed during the year. So what caused it to change? Well, what caused it to change? We had inflows from operating, investing, and financing activities. And likewise, we had outflows from operating, investing, and financing activities, right? So you're going to calculate net operating cash flow, net investing cash flow, and net financing cash flows to explain that change in the water level. Statement of cash flows is not hard. You have the answer right from the beginning. So I would love for you to be the class where everyone nails the statement of cash flows. It takes practice. I promise you, if you'll just practice, you can get this. And so I'm going to try to help you today. We'll go through yet this full-blown cash flow problem like we did on Tuesday, and hopefully you'll feel a lot more confident by the end of the day. I said this in an email. So there's a lot of really good graduate assistants that work in our accounting lab. Some of them didn't have the class with me, so they maybe not know the approach I'm using for the statement of cash flows. You can tell them if they're kind of like not knowing, understanding when you look at the problems. I've posted my slides for them, so they can actually go to the Dropbox folder and pull up the slides if they want to see the approach that I've used, and also the solutions are there. Okay, so if your person in the lab is showing you a different way of looking at this, then you can point them to that. All right, I've put this slide up like 4 times so far. I keep telling you this is probably one of the most important slides. In the multiple choice section, many of the questions rely on this basic relationship. So it starts with the accounting equation, assets equal liabilities plus stockholders' equity. It has to balance out, right? They're always equal. Assets are always equal to your liabilities and your equity. So often we'll give you some information and you're missing the liability number or you're missing the equity number. So you have to kind of just do some algebra to solve for that number. Likewise, you need to understand what stockholders' equity is made up of. Well, it's investments of owners. So if you have investors that have given cash to the business in exchange for stock. But we also have the earnings that accumulate over time, right? As I mentioned in this previous slide, retained earnings accumulates all the earnings year after year that the company generates. And so retained earnings is made up of obviously a beginning balance plus our net income, so revenues minus expenses, minus our dividends will give us our ending balance at the end of the year. So if you take your beginning balances and think about any changes that happen during the year, you'll arrive at your ending balances at the end of the year. So I want to emphasize how important this is. I'm not going to go through all the multiple choice questions. I'm just going to point out to you that at least 5 or 6 of the multiple choice questions, there's only 15, so more than a third of the questions on this practice exam really rely on these simple relationships. Okay? And be aware, I only have 15 multiple choice questions, so they're very comprehensive type questions. They're pretty dense questions, right? And so they're testing a lot of different concepts at once. That's why I keep referring you back to this slide. All right, so I'm going to just show you a couple of examples. We'll go over multiple choice questions toward the end. Here's question number 1 from the multiple choice. And I just want you to see how I set it up. So they give you some information at the beginning of the year, assets and liabilities. You know those numbers, right? They don't tell you what equity is at the end. But can you solve for it? If you know that assets are 60 and liabilities are 40, what does equity have to be? It's got to be 20, right? You can solve for that. It's simple algebra. At the end, they tell you assets are 80, liabilities are 35. You know that your end, you can calculate this ending balance and retained earnings because you know beginning balance was 18. You know that you had revenues of 100, expenses of 70, dividends of 15, so you can solve for that ending balance and retained earnings. What's the only missing number here? Assets have to equal liabilities plus equity. Well, you know part of equity. What are you missing? Common stock, okay? So you can solve common stock has to be 12 at the end, right? And then if you work your way backward, if retained earnings was 18 at the beginning, total equity was 20, common stock must have been 2 at the beginning. So now you can say how much stock was issued during the year. If common stock went from 2 to 12, solve for X. How much common stock was issued during the year? Had to be 10,000. Does that make sense? So the way I set this up is I'm just going based on the accounting equation, what do I know at the beginning, what do I know at the end, and kind of solving for the missing number. Okay, so that's one example. If you look at question 3, I did it exactly the same way. Question 3, they tell you beginning assets are 1.2 million, beginning equity is 460. They don't tell you liabilities, but can you solve for that? Very easy to come up with beginning liabilities, right? They tell you had an increase in assets of 180, so your ending balance is 380,000. They tell you your ending liabilities are 820. So can you solve for ending equity? If you know those two numbers, you can solve for that one, right? What else did they tell you? They told you that you had dividends of 14,000. And so the simple question is, what is net income? If ending equity is 556, beginning equity was 460, solve for X. What does net income have to be? It has to be 110,000. So if you set it up this way, it's actually really pretty easy to solve for.
So we're just assuming that there's no common stock in this case?
Well, there is common stock, but they just tell you total equity. They don't tell you how to break it out. So the total equity section, right, is going to be increased by any issuance if there were some common stock issued. So if they don't mention any stock being issued, then you assume that the only thing that affected equity would be net income and dividends. Okay, so again, we're going back to those relationships I showed you in that previous slide. All right, similarly, question 13, same exact thing. So they tell you beginning assets, 1.85 million, beginning liabilities, 570, so you can infer what was beginning equity? It must have been 1.28 million. At the end, they tell you assets are 1.96 million, liabilities are 510,000. Can you solve for ending equity? It has to be 1.45 million because this has to be true, right? So during the year, what happened? They told you they issued some common stock. So common stock went up. They tell you they paid dividends of $60,000. So what's the only other reason that equity would have changed? They would have earned some net income. Go back and solve for X. Net income must be $130,000. So this is, again, I'll just point this out. The solutions at the back of the practice exam may not make as much intuitive sense. So I'm going to post my slides after class. So I've tried to give you the most intuitive way I can come up with to explain these problems. So I would encourage you to take a look at these slides after class. Hopefully it will help clarify some of the questions you may have had on the multiple choice questions. All right, I'm not going to go through any of the other ones specifically, but I just want to point out there are 3 other problems that really, actually let me go back to this. I just keep going back to this simple setup. This one slide really can help you understand a lot of those multiple choice questions. So a couple of other ones. Question 15, if you solve it, really it's based on understanding the accounting equation and how things change during the year. Question 6, same thing. It's just basic transaction analysis, but how does that accounting equation change during the period? And question 8, also. So again, 6 of the 15 multiple choice questions rely pretty heavily on your understanding of this simple equation. So again, I'll post the slides for you. We're not going to have time to go through all the multiple choice questions, but I keep telling you this is the simple set of relationships that are being tested with a lot of those questions. All right. Remembering which side of the account increases different types of accounts, right? So I gave you this teeter-totter diagram, and I'm being really totally honest with you. When I was a student, I'm a visual learner. I would get my exam, turn it over on the back, and I would write this on the back of the exam so I could keep straight which were debits, which were credits, which accounts increase with a debit, which accounts increase with a credit. So if you can remember these simple relationships, right? If you want to increase an asset, to tip the teeter-totter this way, you put the number on the debit side. If you want to increase a liability or an equity account, tipping the teeter-totter this way, you put the number on the credit side. So we increase liabilities and equity by putting the number on the credit side. Revenues do what? They increase equity, they increase retained earnings. So it's going the same direction. We increase revenues on the credit side. Expenses and dividends do what? They decrease our equity, right? They take away from retained earnings. And so we increase expenses and dividends by putting the number on the debit side. So keeping that straight will help you as you go through different transactions. Double entry accounting, this kind of goes back to that slide I was showing you a second ago. You have to remember that for every transaction you have to keep the accounting equation in balance, and for every journal entry you make, the debits have to equal the credits. All right, we talked about the accounting cycle. What's the process? Every transaction is recorded first in the journal, then posted to the ledger. The journal gives us detail by transaction. The ledger gives us detail by account. It's like a book of T accounts, right? Every time we make entries in those books, we prepare a trial balance to make sure we didn't mess up our debits and credits, make sure everything still balances. Adjusting entries we'll talk about in a minute, but we record them in the journal and post them to the ledger. So again, we prepare another trial balance after we make our adjustments. If this balances out, then we prepare our financial statements straight from that trial balance. At the end, we do closing entries. We have 2 types of accounts. So we have permanent accounts that are on the balance sheet, and we have temporary accounts, which are on the income statement, and also dividends. So we do closing entries at the end of the period to close out our income statement accounts, so we can start with a fresh 0 balance as we go into the next period. So that's the last thing we do at the end of the period before we start a new accounting cycle. All right. So we spent quite a bit of time talking about adjusting entries. There are 2 types of adjusting entries. We have deferrals and accruals. The simple meaning of the word deferral is that the cash comes in or it gets paid, right? The cash is going to go in or out before it shows up on the income statement. Whereas an accrual is just the opposite. We're going to record the effect on the income statement before we collect the cash or before we pay the cash. So to accrue something means to put it on the income statement before the cash flow takes place. And a deferral, the cash flow takes place up front, and we worry about the income statement effects later. This is your typical prepaid insurance, prepaid rent, right? You pay the cash now, and then you record the expense later when you use it up. Or you collect cash now from your customers. You haven't earned it yet, so you have a liability. You owe them something for it. and then over time you perform the services or whatever, and so you actually earn the income. That's the difference between a deferral and accrual. So the two slides I keep going back to, just reminding you what an adjusting entry is like. So the two rules. An adjusting entry never involves cash, and it always involves at least one income statement and one balance sheet account, right? So on the revenue side, we have accruals and deferrals. So which two entries can't be adjusting entries? The ones that have cash in it, right? Because they have cash in it, they're not adjusting entries. So obviously this one up here is an adjusting entry, and this one down here is an adjusting entry. And of course, if you look at them, they have one balance sheet account, one income statement account. Okay, again, accrual. What happens with an accrual? We record the income statement effect before the cash flows. And down here, deferral, we get the cash first, and later we record the income statement effect. Okay, that's the revenue side. On the expense side, same thing. So if they involve cash, those cannot be the adjusting entries, which means this one up here and this one down here are the adjusting entries. And again, an accrual means what? You record the income statement effect before the cash takes place. And down here, the cash happens first, and later you record the income statement effect. Okay, so understanding what is an accrual, what is a deferral, what is an adjusting entry, those are important concepts. So that idea of recording adjusting entries, if you go to the statement of cash flows, what are we doing? We're undoing those accruals, right? Because on the income statement, we show this expense, for example, but the cash hasn't happened yet. And down here, the cash has already happened, but the income statement has an effect. So the statement of cash flows does what? It takes it from your net income number when you're using the indirect method, and you take your net income number and adjust back to the operating cash flow number. All right, so the example we showed you with the bucket, again, I hope that helps you visually to understand what you're doing with the statement of cash flows. All right, so again, if you can understand those 8 slides, then you should be able to do pretty much the whole exam. So let's delve into the statement of cash flows. This is my approach for preparing a statement of cash flows. And so these are the steps that I would go through in solving a statement of cash flows. So at the beginning, in fact, I'm going to go to the next slide. Here's your problem. This is your cash flow problem at the back of this practice exam. Every cash flow problem has 3 things. You're going to have balance sheets with 2 years of data. You've got an income statement, and you've got some additional information. This is the key. This information right here, you're going to have to know in order to do the investing and financing sections. Okay, so that's how it's set up. All right, so given this setup for the problem, what are the steps I follow? So next to the balance sheet, so to the right of my balance sheet, I'm going to put in 3 columns, right? We practiced this on Tuesday. First column, I'm going to calculate the change in each balance sheet account. Second column, I'm going to decide is this an operating, investing, or financing activity. And then the third column, I'm going to say what's the direction of the adjustment for the operating items. And I'm going to use this rule of thumb up here to come up with the direction of that adjustment. All right, then so the operating section, remember our 3-column matrix? We're going to simply go through the 3-column matrix based on what we calculated in these 3 columns up here. And we're going to come up with the operating section. When you do the 3-column matrix, once you've done that, you can either do the indirect method or the direct method. As I mentioned last time, it's 2 sides of the same coin, right? Once you've done the 3 columns, you've got it. So that's the operating section. For both the investing and financing sections, I recommend using T accounts. That's the best way to visualize what cash came in and what cash went out. All right, one last question I'll ask you. On the balance sheet, so you're trying to determine is it operating, investing, or financing? There are certain types of accounts on the balance sheet that are associated with operating activities. What kind of accounts are those? Current assets and current liabilities, right? Short-term assets, short-term liabilities. There are certain types of accounts on the balance sheet that are associated with investing activities. What are those? Long-term assets. And then there are certain types of accounts on the balance sheet that are associated with financing activities. What are those? Long-term liabilities and equity accounts, right? If you can keep that straight, statement of cash flows is a piece of cake. Right. I'm going to walk you through, again, this is the approach I would use to come up with a solution to this. At the back of the exam, it's not necessarily laid out as clearly, so these slides will be helpful for you as you're trying to go through and practice this problem. All right, so first thing I would do would be take these two columns. Off to the right, I'm going to create some space, and I'm going to create 3 columns. All right, so my first step is I'm going to calculate the change in each account. I'm assuming you've all tried this, so this part was pretty easy. So you take the 2016 number minus the 2015 number. So 228 minus 120, that's your change in cash, right? So that happens to be the answer to the whole statement of cash flows. Cash went up by 108, right? So the level in the bucket, the water level went up by $108. You're trying to explain that change. So at the end, you'll know if you got this problem exactly right if you reconcile to that number. All right, so that's step 1, calculate the change in each account. Second question is, what section did they go to, right? So all these current assets, so accounts receivable, inventory, prepaid selling and administrative expenses, what are those going to be? They're all O's, right? They're operating. Down here, we have accounts payable, unearned revenue, income taxes payable. Those are all short-term liabilities, right? So what are those? They're also operating. Right here we have long-term assets. What are those? Investing. And down here, long-term liabilities and common stock. Those are financing activities, right? And the one exception, put it right here. So dividends payable, usually we pay dividends within a year, so it's technically a current liability. Right? It's the one exception because even though it's a current liability, that's a financing activity because when we pay dividends, that's definitely a financing activity, right? According to the FASB. Right, so once I've identified my O's, my I's, and my F's here, now I'm ready to pretty much roll into the next question, which is for the operating items, is the adjustment in my 3-column matrix going to be a positive adjustment or a negative adjustment, right? So the rule of thumb that we're using simply says what? If I have an increase in an asset, it means I'm spending cash, right? It's an outflow of cash, so it's a negative adjustment. So with assets, the direction goes in the opposite. Whatever, if the asset went up, it's a negative adjustment. If the asset went down, it's a positive adjustment, right? So it's the opposite direction. With liabilities, they go the same way. So if I have an increase in a liability, that's an inflow of cash, so it's a positive adjustment. If I have a decrease in a liability, it's going to be an outflow of cash, so it's a negative adjustment, right? So if you can keep that rule of thumb straight, let's quickly go through this. Accounts receivable went up or down? Up, right? So the adjustment is negative. Inventory went down, so what kind of adjustment? Positive. Prepaid selling and administrative expenses went down, so the adjustment is positive. Okay, down here in the liabilities. Accounts payable went down, so the adjustment is negative. Unearned revenue went down, so the adjustment is negative. Income taxes payable went up, so the adjustment will be positive. Okay, that's it, guys. Very simple. If you just go through these steps, get it all teed up, now you're ready to just roll through the operating section. Okay, so again, these 3 columns will help you with the operating section. All right, so on the exam, you'll notice that I gave you all this information about the balance sheet and income statement on page 1. Turn the page over and I gave you the 3-column matrix. You don't have to use it, but I've been doing cash flows. Okay, I'll tell you a little story. Once upon a time, I was a student. I took this class in the fall of 1987. It was my first accounting class. I loved it. I was an engineering major. I decided to become an accounting major. But this class, when I took this class, there was no such thing as a statement of cash flows. Didn't exist. Back then, we were in a dark world. We just didn't know how to understand our cash, right? People would look at the cash and say, what the heck happened to cash? I have no idea. So they invented the statement of cash flows shortly thereafter. So when I was in the next class up, the intermediate class, they invented the statement of cash flows, and they said, you guys have to learn this. I have the proud pleasure of saying I was in the first group of students to ever learn the statement of cash flows. I went to my first job. I was the only guy that knew what was going on. Like the partners at the CPA firm say, you handle this. It's a cash flow problem. You figure it out. Right? So, but this 3-column matrix thing didn't exist back then. Nobody knew how to do this very well. And so I have, for many, many years, been practicing the statement of cash flows. And I'm telling you, this little 3-column matrix that we have right here, next slide, It's the most handy-dandy tool. I encourage you to use it. You don't have to, but I encourage it. All right, once you get this set up, there is one more step I forgot here. We want to align these O items, so the operating items. So these are the balance sheet accounts that are associated with what? Accounts on the income statement, right? So we want to know which income statement account is associated with each of these balance sheet accounts. So we'll go through that in just a second. I just want to say one more thing. So these changes in these accounts right here, especially for the O items, we have to be able to say in words what happened, right? So in words, I have to be able to say accounts receivable increased, inventory decreased, prepaid selling and administrative expenses decreased, accounts payable decreased, unearned revenue decreased, income taxes payable increased, right? In words, I have to be able to write out what happened to those accounts. So that's what this column tells me. So this is for describing in words what happened. This column over here is the direction of the adjustment you're going to make. You're going to take the absolute value of whatever number's here for those O items, and then you're going to add or subtract it, right? So this tells you, do I add or subtract the absolute value of that change? All right, so let's quickly go over here. Accounts receivable is associated with which item on the income statement? Sales, right? If we sell something and they don't pay us yet, then we have accounts receivable. So that's going to be associated with sales. Inventory, which item on this is it? Yeah, so inventory is associated with cost of goods sold, right? I sell people inventory, they walk out the door with it. That becomes my cost of goods sold. What other account? So that's cost of goods sold. Oh, I forgot one. Unearned revenue. If people pay me cash in advance and I haven't done the work for them yet, then I have an obligation, right? It's a liability. I owe them a service. So unearned revenue is a liability. So let me again point out, accounts receivable and unearned revenue both go with sales. You all just told me inventory is associated with cost of goods sold. What other account is associated with cost of goods sold? Accounts payable. So you notice that kind of there's both an asset and a liability that could be associated with each income statement item, right? So we have 2 items associated with sales, 2 items associated with cost of goods sold. All right, so prepaid selling administrative expenses is associated with which income statement line item? Selling administrative expenses, right? And we have one more. Could there be a liability? There could be some kind of selling and administrative expenses payable account, right? We don't happen to have one here. What about this one? Income taxes payable? It's going to go with income tax expense. Now, we don't have it, but in the previous problem we did on Tuesday, we did. Could we have an asset associated with income taxes payable or income tax expense? We could have prepaid income taxes, right? Sometimes you pay your taxes in advance, so we could have that as well. So just be aware, you could have either just one account or you could possibly have 2, right? You could have both an asset and a liability or just one associated with each one. All right, again, we just went through each of the O items. Each of the operating items, we want to know how they link up with the income statement. All right, so once we have this, we're all set. We're ready to do the 3-column matrix that I was just talking about so fondly. All right, so this 3-column matrix, you're going to be given, it's going to be blank, just like it was on your practice exam. So you have to list out the income statement exactly as it's given to you, right? So in your problem, they gave you an income statement right in the middle of the page. Simply list it out as it's given, and then write the numbers in as they're given. I like to use positive numbers for the revenues and gains, and then negative, so bracketed, for the expenses and loss items. Okay, so there's my net income. All right, so what steps would I go through based on this information here? All right, so the first thing I typically will do when I'm going through this middle column here, the adjustments, is I'll ask myself, do we have any items on the income statement that were non-cash items or that don't belong in the operating section, they belong someplace else in the statement of cash flows? So this problem actually has 3. It's a little more complicated than one we did in class the other day. So what items do you see here on the income statement that, first of all, are non-operating? So this one right here, loss on the sale of property, plant, and equipment. When I buy equipment, that's an investing activity. When I sell equipment, that's also an investing activity, right? It doesn't go in the operating section. So this loss, and that could also be a gain, right? So in the previous problem we did Tuesday, we sold it for more than it was worth on our books, so we had a gain. In this case, we sold it for less than it was worth on our books, so we had a loss, right? Okay, so this is a non-operating item. Okay, so if I want to back it out, this is right now shown as a loss, right? A negative. How do I back it out? I'm going to add it back, right? So I'm going to add back this $170 loss because it doesn't belong in the operating section. I want to put this later. It's going to affect the investing section. So I'm just backing it out of the operating section. Okay, somebody else told me there are some non-cash expenses on here. What are they? Okay, depreciation and amortization. Now, amortization is a new word for you. Let me quickly explain. When I buy a physical asset, a machine, a truck, a building, something I can touch, it's a tangible asset, right? Tangible means I can touch it. There are other assets that aren't tangible. You can't touch them. They exist only in the form of like a contract. So remember we talked about goodwill, first day of class, I think it was maybe the second day of class. If I have a patent, I develop a patent for a product, or I have a copyright on some kind of, like a book or something, those are intangible assets. They're just a contract. There's nothing physical that I can touch or kick or paint or anything like that, right? So tangible assets, over time, they depreciate in value, so we record depreciation expense. Intangible assets, right? If I have a copyright that has a legal life of 17 years, what's going to happen? I'm going to spread the cost of that copyright or that patent over the legal life of the asset, right? So instead of calling it depreciation expense, because it's not really depreciating like a physical asset, we call it amortization. It means the same thing. So I'm just allocating the cost over time. Does that make sense? So these two words actually mean the exact same thing. It's just different types of assets. Okay, so depreciation expense. I had some plant assets. They depreciated, right? We recorded depreciation expense. Nobody came by to collect cash from me, right? The depreciation expense, we just showed a decrease in the asset by crediting accumulated depreciation, and we record depreciation expense. So that's a non-cash item. So if it's negative, what do I do to back it out? I'm going to add it back, right? So I'm going to add back depreciation expense. I'm going to add back amortization expense. So what's going to show up on the far right? They're zero. They're just basically removed from the operating section, right? Okay, now I'm going to simply go through each of the other income statement items based on that previous slide. I'm going to match up. So accounts receivable and unearned revenue are going to go on the sales row. Inventory and accounts payable are going to go on the cost of goods sold row. And let's see what else we have. Prepaid selling and administrative expenses, that change is going to go on the G&A expense line. And income tax payable is going to go on the income tax expense line. Okay, so starting at the top, sales, we had AR, accounts receivable, and unearned revenue. Cost of goods sold, we had inventory and accounts payable. And we had prepaid administrative expenses here, and we had taxes payable down here. Now, going back, I want to point out one thing. Remember, this column tells us in words what happened. I have to describe in words what happened to the account. Did it go up or down? And over here, this is the adjustment. Am I going to add or subtract the absolute value of that change, right? So in this column here, what have I got? I'm going to subtract, so it's a minus. I'm going to subtract the increase in accounts receivable. I'm going to subtract the decrease in unearned revenue. I'm going to add the decrease in inventory. I'm going to subtract the decrease in accounts payable. I'm going to, where are we here? I'm going to add the decrease in prepaid selling and administrative expenses, and I'm going to add the increase in taxes payable. Does that make sense? So you have to be able to say it in words, but you have to know, is it a plus or a minus, right? Are we adding or subtracting the absolute value of that change? You got it? That part's easy, right? So the last step here is simply add across. So 22,680 minus 382 minus 30 will give us the answer. Negative 170, add back 170 is going to give us 0. Negative 14,800 plus 153 minus 70 will give us a number over there, right? So if I add across, those are the numbers I get in my cash flow column. So this is my income statement column. This is my cash flow column over here. Once I've completed these three columns, it doesn't matter if the question says do the direct method or the indirect method. The answer is right there in that 3-column matrix. Okay, so I just want to be really clear. If the problem, and this problem in fact said indirect, right? If the problem says use the indirect method, what do we start with? We start with our net income number, we make all of those adjustments, and it gives us our operating cash flow number, right? So the yellow highlighted cells in our 3-column matrix, those are the numbers we're going to use for the indirect method. All right, so if I were preparing the actual cash flow statement, I would take these numbers from my 3-column matrix. So you had like 3 pages, right? The first page had all the data. The second page is where I asked you to do all your calculations. And the third page is where you actually prepare the statement of cash flows. So I would simply start with net income, 2,062. And let me just tell you the order I would go. So this is my personal preference. What I would do first is I would take those non-cash items and non-operating items. So I would add back depreciation expense, and I would add back amortization expense, and I would add back the loss on the sale of equipment. So I'm doing those first. Those are the non-operating or non-cash items. And then I simply go through the matrix here and take those adjustments. I'm going to write it. Guys, this is not rocket science. Here's the top one. I'm going to do what? Subtract the increase in accounts receivable, right? So in words, what did I say? Minus the increase in accounts receivable. And right here, what I'm going to say? I'm going to say minus the decrease in unearned revenue plus the decrease in inventory minus the decrease in accounts payable plus the decrease in prepaid selling and administrative expenses and plus the increase in taxes payable. I'm literally following straight down the rows here in the column and middle column. And when I get to the end, I get my adjusted cash flow number, 3,048. So I started with net income over here, made all of the adjustments, and I ended up with operating cash flow, 3,048. It's easy, guys. It's really easy, I promise. What if I had asked you instead to do the direct method? No problem. The direct method is where? So if I'm back here, if I'm back at my blank 3-column matrix, where's direct? Okay, so Liz says it's in the right column. Exactly. So direct method, here we go. Direct method is the far right-hand column. Now, a lot of these are 0, which means they don't show up at all. But for those items that do have a number by them, I got to convert whatever number was on the income statement, whatever words were on the income statement, that's a revenue or expense name. I want to convert it to the cash flow that's associated with it, right? So when I make a sale, I'm hoping those customers pay me, right? When I collect the cash, what am I going to call that cash? Well, first of all, if it's a positive number, it's cash. Is it cash collected or cash paid? If it's a positive number, it's cash collected, right? So I'm going to call this cash collected or cash received from customers. Wow. Nothing hard about that. How about this one down here, cost of goods sold? It's a negative number, and I have a negative number over here. Is this cash paid or cash received? It's cash paid, right? What was I paying it for? To buy the inventory. So I call it cash paid for inventory. This number here, negative or positive? Negative, so it's cash paid. Cash paid to who? Well, it's cash paid for selling and administrative expenses. Whoever those vendors are that I owe money to, that's who I'll pay it to. And then this one right here is cash paid for what? For taxes. Okay, so now, statement of cash flows, direct method for the operating section is simply list these out. So the direct method, in fact, makes a whole lot more sense. So the direct method is, operating cash flows is cash received from customers, cash paid for inventory, cash paid for selling and administrative expenses, and cash paid for taxes. That's it. What's the number? 3,048. It happens to be the exact same number I calculated using the indirect method. Why? It's the same 3-column matrix. It's the same exact adjustments. It's just 2 sides of the same coin. So most of the students who take this class here at UGA only learn one method. The good news is you can do both, right? It makes no difference. Which one makes most sense? Like if you were trying to explain how much you love this class to your grandma, she said, could you please explain that statement of cash flows to me? What would you say? Would you want to show the indirect method or the direct method? The indirect method makes no sense to most people, right? Net income plus or minus all this stuff, nobody knows what that means, right? But if you tell someone, this is the amount of cash we collected from our customers when we sold inventory to them. This is the amount of cash that we paid to actually buy the inventory. This is the amount of cash we paid to cover our regular operating expenses. And this is the cash we paid for taxes. Anybody can understand that. So the direct method is the preferred method. The FASB prefers this method. But since most companies actually prefer the indirect method, they say you can do either one. But since everybody's doing the indirect method, they say, well, if you choose to use the direct method, you also have to provide a reconciliation using the indirect method. So if you had a choice, do one or do both, what would you choose? Most companies say, I'll just do one. I'll just do the indirect method, right? But this one actually makes a whole lot more sense. Do we have any questions about the operating section? All right, a lot of the points on this problem are going to come from the operating section. You've got to get this part right, okay? The next section is the investing section. Tell me again, you said it earlier, what kind of balance sheet accounts are associated with investing activities? Long-term assets. So this section right here, we have property, plant, and equipment and intangible assets, right? We want to analyze the T accounts for those different types of assets. I'm going to go ahead and point something out to you. This was kind of a curveball because we hadn't really talked much about intangible assets prior to now. But the good news is, you notice that there's no change in intangible assets. Did we get any new patents this period? No. Did we sell off any franchises? No, because the balance stayed exactly the same. What's the only change? We had some amortization. We were amortizing some of those intangible assets. So the only change was amortization expense. No cash paid, no cash received. So we're not even going to have any adjustments to show here at all. All the action is happening up here with property, plant, and equipment, right? So we know the beginning balance in property, plant, and equipment and the ending balance. We know the beginning balance in accumulated depreciation and the ending balance. Okay, so I start off by setting up those two T accounts. So beginning and ending balance, right? Now, in the extra information that was given, they tell you some stuff that you need to know to figure this out. Well, first of all, we know there was depreciation expense, right? Go back to your income statement. How much was depreciation expense? Somebody help me out, because I can't remember. How much? $1,068, right? Okay, so that number is going to go here, right? It's going to be a debit to depreciation expense and a credit to accumulated depreciation. It's going to go right there. And then what else happened? If you read the additional information down below, what does it say? We sold some equipment and we bought some new equipment, right? There's one other thing in there that's super important for you to understand. So guys, look closely at, guys, if you blow off this additional information, you're going to miss a lot of points because there's some key things that took place here. So it says, first of all, part A, letter A, equipment with an original cost of $1,200 was sold during the year. That's important. So sales, we're going to show decrease in equipment, decrease in accumulated depreciation, right? Look at part C. Equipment costing, this is so important, guys. So I'm going to tell you a little trick. Accounting professors, devious people like I am, right? They come up with these little tricks to catch unsuspecting students on exams. I'm about to reveal one of those tricks. Are you ready? So it says, equipment costing $350 was purchased. We're getting new equipment, but not with cash. In exchange for common stock. So one of our investors gave us some equipment, a machine or something, or a truck, and we just gave them common stock. Was there any cash changing hands? Aha! So this is meant to trick you. Let me show you. We'll show you in a second how to take care of that. Then it says all other purchases were cash transactions. So if we did purchase any other equipment, it was purchased with cash. But that one piece, that $350, whatever it was, machine or whatever, was not exchanged for cash. It was exchanged for common stock. Okay, that's important for you to remember. All right. So to set this up, I'm going to first of all put in my depreciation expense over here, which would affect accumulated depreciation. That $350, my friends, is so important. It was an increase to equipment, right? It was a new machine, a new truck, whatever, that increased my equipment. It did not affect cash. If I fail to put this on here, if I forget, I'm going to get the wrong number down here for the amount of equipment that was purchased for cash. Does that make sense? I'll come back to this in a second. All right, so guys, we always start, so these three numbers right here, this is the cost of the equipment I sold that was given in part A. We don't know what the accumulated depreciation was, and we don't know the book value. In the problem we worked in class on Tuesday, so there's always these three numbers, and they usually only give you one of those numbers, right? In the problem we worked Tuesday, what number did they give you? They told you the book value, right? This one they did not tell you. They told you the original cost. So we got to solve for two unknowns. Let's start over here. Can we solve for this number? the accumulated depreciation on that equipment sold? Sure we can. Beginning balance in accumulated depreciation plus depreciation expense minus X, whatever that was, equals 1,400 ending balance. Solve for X. Ah, sure enough, the accumulated depreciation on that equipment right there was 758. Now can I calculate the book value? Original cost, 1,200, minus the accumulated depreciation, 758. Oh, book value must have been 442. So I'm just going to tell you, you're always in a problem going to be given one of those three numbers and you have to solve for the other two. So it's easy. It looks the same every single time. Make sure you read that additional information carefully. All right, guys, once I know this number, I can come back and solve for the amount I paid to purchase equipment using cash. Okay, so if I come back here, I'm now solving for this number right here. So beginning balance, 6,000, plus the 350 in equipment that I got from issuing stock to an investor, minus the equipment I sold, plus X, whatever this number is, gives me the ending balance of 7,170. I solve for this number and I get 2,020. What if I had failed to read that additional information down below? What would I have done? I wouldn't have put the 350 there. And instead, when I solved for X, I would have got what? 2370. I would have gotten the wrong number because I failed to take into account the fact that I received some equipment by issuing common stock. Okay? So that's critical. And then the other thing here, the question is, how much did I receive, how much cash when I sold this equipment right here? When I sold it, how much cash did I collect, right? So the idea is I have to solve for the cash proceeds. So the cash proceeds minus my book value, that's what it's worth to me on the date of sale. In this case, resulted in a loss. So the example we did on Tuesday, we sold it for more than the book value, so we had a gain. In this case, we sold it for less than the book value. We lost money on the deal, right? So if we lost, so X minus 442 equals a negative number, a loss of 170. Solve for X. I sold it for 272. Not a good deal, right? If you're selling something, you want to sell it for more than you've got into it. So we would have hoped to sell it for at least 442, hopefully something higher. But instead, we sold it for an amount lower than that, so we lost money on the deal. Does that make sense, everybody? Okay, so it's actually quite simple. So that's all we need to know. We solved for the amount of cash we received from the sale of this equipment and the amount of cash paid for that purchase of equipment. Those are the two numbers that go into our investing section. Fendi?
What is the proceeds again?
What is what?
The proceeds.
Oh, proceeds, that's cash proceeds. That's how much cash I collected when I sold that equipment. So that's just by term. It's the amount of cash I received from the sale of that equipment. You can label it however you want, but that's what I meant by that. Now, I want to show you one more thing. You remember those intangible assets that we talked about? Intangible assets you can't touch or kick or paint, right? So those intangible assets I'm almost there. Okay, so I'm trying to show you the cash flows. When I purchased this equipment right here, what did the journal entry look like? I increased equipment by 2020, and I paid cash 2020, right? How about when I sold this equipment right here? What does it look like? Well, remember I received cash of 272, and it was a loss. Okay, so looking up here, this journal entry is actually showing what happened when I sold the equipment. I decreased equipment with a credit. I decreased accumulated depreciation with a debit. And I'm going to show cash coming in of 272. So this is the journal entry. Here's the cash coming in. Here's the decrease in accumulated depreciation. Here's the decrease in equipment. And I recorded a loss on sale. Let me just point out again, earlier, what did I tell you? Your debits always have to equal your credits in every single journal entry. Yes?
For proceeds, I understand what it is, but that number,
I had to solve for it. So if you go back one slide, that's the number I was solving for right here. Yeah. So the gain or loss is going to be on the income statement. So, hey guys, look at this is, I know we're stretching you a little bit here. If you look closely and compare this problem to the one we did on Tuesday, the one on Tuesday was a gain. We sold it for more than the book value. This one we sold for a loss, less than the book value. So if you kind of look closely at these two examples, we do the same calculation each time, I think it will start to click for you. Yes?
Why is the loss on sale
Why is it what?
a debit?
A debit? Okay, good question. So let me come back over here. Okay, Well, first of all, I was kind of pointing out that the debits have to equal the credits. So you could have just by default said to make this journal entry balance, it's going to have to be on the debit side. Here's how I think about it. When I earn a revenue, remember those T accounts, the teeter-totter diagram? I said to increase a revenue, I put the number on the credit side, right? It goes the same direction as equity. Well, I think of a gain as like a revenue. I made money, so it's going to go on the credit side. An expense, remember expenses were opposite, they're on the debit side. Well, a loss to me is like an expense. I lost money, so it's going to be taken away from income, so I put it on the debit side. So that's a good question. Again, going back to my teeter-totter diagram, we never specifically mentioned this. Revenues are kind of the same as gains. Expenses are the same as a loss. Very good question. All right. So guys, these are my 2 journal entries with respect to the purchase of equipment and the sale of equipment, and it shows exactly what happened to cash. Those are my cash flows that are going to show up in the investing section. I did want to point out, though, the intangible assets here. So we have a beginning and an ending balance, which happen to be the same, right? So did I buy any new intangible assets like patents or copyrights? Didn't purchase any. Did I sell any? Nope, nothing happened. So that's what, there's no change here. There's no cash flow. There's no cash coming in or out. So therefore, it doesn't affect my, my cash flow statement at all. Now notice the parallel here. Depreciation expense shows up over here in accumulated depreciation. Amortization expense shows up over here in the accumulated amortization account. Okay, so that's the same. What if I had purchased a patent during the year? And I tell you, purchased a patent for 100. Well, the 100 would go here. And this ending balance would be 950, right? Would this be a cash flow? Yeah, it would look just like this one up here. Debit, intangible assets, credit cash, right? So we don't have that in this problem, but that's what it would look like. Could I sell a patent or a franchise to somebody else? Yeah. Well, then it would look like this, right? So you notice how with the sale of equipment, it would look like that down here as well. But it's not going to happen. It's not in this problem. And it's not going to be on the exam. Don't stress about intangible assets because we haven't really talked about them yet. I just want to kind of make you aware of what's happening. All right. So guys, the investing section, notice my 2 yellow numbers here. I have cash received from the sale of equipment, 272. Cash paid for the purchase of equipment, 2020. Net investing cash flows, negative 1,748. That's the investing section. I'm just showing the cash paid here and the cash inflow here. Got it? Yes?
Are we going to need to show the journal entries like
No, you don't have to show the journal entries. I'm just showing them because you can kind of visualize what's happening. No, later in the class we'll actually talk about purchasing and selling assets and we'll do journal entries then. For now, no, just focus on the statement of cash flows. So I'm providing a lot of additional information here, but guess what? Later in the class, we'll do this stuff and it'll make total sense to you because you've seen it before. All right. That's the investing section. Financing. What types of accounts on the balance sheet are associated with financing activities? Long-term liabilities and equity. And one exception, dividends payable, right? It happens to be a short-term liability, but it is associated with financing activities. All right, guys, this is easier, in fact, than the investing section. All I'm going to do is do the beginning and ending balance in each one of those T accounts and kind of look at what happened during the period. So retained earnings had a beginning balance of 383, right? Ending balance of 854. What caused my retained earnings balance to change? Remember the funnel? There we go. So beginning balance plus net income minus dividends, right? That's what's going to cause retained earnings to change. So we have beginning balance plus net income minus dividends declared. That's how much I promised to pay my shareholders, equals my ending balance in retained earnings, right? Now the question is, in the problem we did Tuesday, the amount of dividends we promised to pay, we actually paid that exact amount. So there was no change, there was no dividends payable account at all, right? In this problem, we had a beginning balance in dividends payable of 90, ending balance of 289. What does that mean? Why did dividends payable change? We declared a bunch of dividends, but we haven't paid them all yet, right? That's why the balance went up. We owe more than we did at the beginning of the period. So when we go back over to this T account, what happened? So we started off with a beginning balance of 90. We declared dividends of 1591. That's what we promised to shareholders we would pay them. but we only actually paid them $13.92, resulting in the ending balance of $289. So you have to be able to solve for that missing number here. This is the actual dividends paid. Do you understand the difference? So dividends declared, that's what we promised to pay them, right? We put out a notice saying we're going to pay you a dividend, but the amount we actually paid was less than that, $13.92. So again, beginning balance 90 plus dividends declared minus dividends paid, X equals ending balance 289. Solve for X, 1392. Okay, that's not hard. You can do that. And then the last two are really simple. Long-term debt is common stock. Remember I told you if you don't read the fine print in that additional information section, you're going to mess up both the investing section and the financing section? Well, remember that crazy $350? Remember one of our shareholders gave us a truck or something and we just gave them common stock for it? Remember over on the asset side, we had an increase in long-term assets, property, plant, equipment of $350. Well, the offsetting credit is what? We have a credit to common stock for $350. If I forget about this and don't put it in here, I'm going to calculate the wrong number. So what caused my common stock account to increase? I started with a balance of $3,500. I issued some additional stock for that truck that I got from a shareholder. And then I issued some additional stock for cash, which I don't know, to get my ending balance. So if you calculate what is X, you get 150. So you have to, what would have happened, guys, if I forgot this $350 transaction? What would I have come up with? I would have said 3,500, ending balance 4,000. I would have solved and said 500 was my cash received from issuing stock, and I'd have the wrong number, right? Because $350 of that stock that was issued was not in exchange for cash, but in exchange for a machine or a truck or something. What was the cause of change in long-term debt? If it increased, it suggests what? I borrowed more money, right? I borrowed money and I owe the bank for that. So those two numbers right here become financing cash flows. Do you understand that? All we did was looked at the change in those T accounts, and that's going to be the cash that was paid for financing activities. So my financing activities, we have three numbers. We have a cash outflow for paying dividends. We have a cash inflow from issuing long-term debt. We borrowed money from the bank. And we have a cash inflow from issuing additional shares of stock in exchange for cash. So my financing section looks like this. Cash received from issuing stock, 150. Cash received from issuing long-term debt, 50. Cash paid for dividends, 1392. Net financing cash flows, 1192. Got it? Okay, everybody, I want you to pause and I want you to think really carefully. Remember I told you there's some sinister tricks that accounting professors tend to use to trick students? What was the example I gave you here? You purchased some equipment by issuing common stock, right? Is there another way I could twist that to trick you? Instead of receiving that equipment in exchange for common stock, I could say you purchased some equipment by borrowing money or opening a financing agreement with the seller. So it could be, instead of issuing stock to receive that equipment, I could say you purchased equipment in exchange for long-term debt. In other words, you borrowed the money. And how many of you ever bought a car? Typically what happens, you go to the car dealership, say, I want to buy this car. They say, we'll finance it for you. So you're going to make payments over time to them. Same kind of thing. If I purchased a truck or some equipment for my business and just signed a note saying I'll pay for it later, then instead of going here, it would have gone here. Here's a hint. The problem I'm going to give you for the weekend, that's the trick. So you're going to have some cash, some equipment coming in, and it's going to be in exchange for signing a note payable, right? So it could, again, affect both the investing section and the financing section, but instead of through common stock, it's going to be through long-term debt. Watch for that on the problem you work this weekend, right? So I'm opening up my playbook for you. I'm showing you all the tricks. Make sure you understand how to handle those situations, okay? So guys, putting all three parts of the statement of cash flows together. We've got the operating section, and by the way, it told us to use the indirect method. That's why I'm using the indirect, right? What if they had said use the direct method? I would have simply popped in the direct method, right? Again, two sides of the same coin. Here's my investing section. Here's my financing section. Look closely, guys. Remember we had 3 faucets coming in the bucket, 3 holes going out at the bottom? So my net cash flows from operating activities, positive 3048. Net flows from investing activities, negative 1748. Net cash flows from financing activities, negative 1192. So add up those 3 cash flow, operating, investing, financing. What's my net change in cash? 108. How do I know if that's right? You had an answer key back at the beginning. What was the change in cash? 108, right? Here's some easy points on the exam. Don't skip this. This is given. You can calculate the change in cash, 108, add it to the beginning balance, and it's going to give you what? Your ending balance. There's like some points allocated on the exam just to make sure you do this part. So even if you make a mistake up above, you know what this part's supposed to be, right? Make sure you get this part right. Any questions about the statement of cash flows? All right, yes?
On the test, if it's the direct method, do we have to like do the direct and then account for it, like do the indirect?
Good question. So real companies out there in practice, if they choose to use the direct method, they also have to report the indirect method. I would not ask you to do that. So this is just for our class purposes. I'm going to have you do the 3-column matrix and calculate your operating cash flow. And I'm going to say either use the direct or the indirect. But I won't ask you to provide a reconciliation, right? Yes?
So for the direct method, if you were to give us that instead of indirect, we would still have net income?
No. So remember the direct method, we don't start with net income. We just take that right-hand column of the matrix and we just simply go down. Cash received from customers, cash paid for inventory, cash paid for selling administrative expenses, cash paid for taxes, net operating cash flow.
So net income would not be in.
Net income wouldn't show up at all, right? So if you go back to that slide, I'll post my slides for you, but I showed you exactly what the operating section would look like. You just pop that in. Yep. All right, so guys, any more questions about the statement of cash flows? It's 40% of your exam. Yes? Okay. I'm going to show you, we can talk afterward, but guys, it's set up the exact same way. So the cash, in other words, I want to know how much cash I received when I sold that equipment. I know there's a gain or loss that's given on the income statement. I calculated the book value. That's what it's worth to me, 442. And so I just put X right here. X minus book value, 442, equals, in this case, a loss, negative number. Solve for X. That's really all there is to it. And again, compare this problem to the one we did on Tuesday, and it should make a lot more sense. All right, guys, listen. Statement of cash flows. You got the one we did in class yesterday. You got the one that we did today from the practice exam. I'm going to email you after class and send you yet another one. And you can go back to the first day of cash flows and practice that. The homework problems, you had 2 of them. 2A and 6A, I think, were the numbers. Rework those. You have lots of examples. Now, I will say one more thing about the 2 homework problems. The book doesn't always show it the same way I do. But if you follow my approach, you should be able to get the exact same answer. Okay? Now, with respect to the multiple choice, I know some of you are anxious to go. We got 6 minutes left. If you'd like to stay, you can just ask me multiple choice questions and I'll show you the solution. But I will post my slides. And again, I think the answer is a little more intuitive in the way I've put them in my slides. So you might find them to be helpful as you study for the exam. Don't wait till Monday, guys. Please use the accounting lab. They're open today until 9 o'clock. They're open tomorrow till 3 o'clock. Monday, they're open till 9 o'clock at night. So please take advantage of the accounting lab. Use that. Practice, practice, practice. You have to be able to, I would honestly say, you should be able to print out that practice exam and work it straight through. Time yourself. Can you do it in 2 hours? And you need to be able to get it without looking at the solution. So you need to maybe print it out and work it 2 or 3, maybe even 4 times until you feel very comfortable with it. Any other questions before we go to the multiple choice? Yes?
On the homework, can I have the ratios?
Good question. Some of the homework problems ask you to calculate ratios. I'm not holding you accountable for that on exam 1. That's going to come on exam 3. So anytime we go through, kind of look at them, but we won't actually test you on that for exam 1 or exam 2. Any other questions about the exam? Yes?
How similar is the exam?
So the question is, how similar is the practice exam to the real exam? It's very similar in difficulty, right? It's not the exact same questions, like the multiple choice are going to be a little different, but same concepts. I think in terms of like concentration. Remember I showed you there were 6 of them that depended on that accounting equation and those relationships. I would say you have a similar proportion on the real exam. In terms of difficulty, I think this is a very good cash flow problem, very similar in difficulty to what you're going to see. And again, I'm going to give you yet another practice problem after class today that you can work. Make sure you can work these cash flow problems hands down. Work with your friends. Get to maybe the people you were in groups with for the first group project. Study with them. If you've got a friendship there, study with them. Go to the accounting lab. Take advantage of it. Work hard this weekend, guys. I want you to be the class that nails this exam, does really well. Good luck to everybody. If you want to stick around, I'll answer questions on multiple choice.